Guys, welcome back to the show today. We have Max in the studio.
What's going on, brother? Good to see you, man.
To see you.
Again.
Exactly. I was about to say, guys, I'm sure you remember because I tweeted about this. You came in my old studio. We did a banger of a podcast.
I know, I did 2 hours.
2 hours.
We did 2 hours and then you can tell the story, mate.
Yeah.
It's your pod.
Technical issues. You know.
We didn't get the recording. It got lost in translation. We had an earthquake. It got thrown out the window.
We got fire. Everything.
We had a fire. Yeah. A fire of incompetence.
Exactly. But finally, we have you back on the show. Guys, as always, in the comments down below, you will find this beautiful man channel, even though you should know by now because you have one of the best, one of my favorite at least, YouTube channel where you go live, you do some TA, which we're going to talk about it. But before we dive into it, do you mind to give us an intro and tell us about yourself?
Yeah, I was saying to you, I'll say it all again. But it was a few months ago anyway, and it's
exactly. Maybe things have changed.
Yeah, and also I want to make a point because we were in that podcast. We were talking about determination, smiling mindset, and all that kind of shit. And you know what? At the end of the pod, when we lost it, we both looked and said, we have to stick to what we were just saying. Exactly. And we just rolled up. Like, you know what, mate, don't worry about it. I'm so happy. I'm so happy we lost it. As we can do it again. But yeah, my story is pretty simple. I started as a trader first. So I'm not some guy in crypto, straight in crypto. I started trading when I was 22, 23 years old in Australia. And I came down that path due to the fact that I didn't want to work for other people, to sweat and work for them to make money or trade time, basically. You know, I didn't want to have to trade time to make money. And I was in Australia. I was on a working holiday visa. There was no work. There was no holiday in that journey. So I just realized, like, if I don't find something that I can do on my own time and make money with my own brain and use my brain and myself to make money, and I'm never gonna have freedom. That was kind of actually, it was earlier than that as well, because I remember working some shit jobs in England. You know, I was working in Ladbrokes, in betting shops. I was working on the phone doing telesales, like listening. Oh, yep, sorry, sir. And I just thought to myself, like, even if I got to the top of this shit, it's still not going to be freedom, because even if I become the manager of this place, I'm just gonna have to be here all day and this shit fucking So, and also I've always had a rebellious part of me, because I've been fired from every job. I wasn't a bad kid, but I was a naughty kid. Let's just say that, to say the least, actually.
Yeah, it makes two of us.
Yeah. It's the best way, bro. But so I kind of I stumbled across trading because I was trading the Australian dollar and the Great British Pound. I was looking at stocks, shares, indices, and individual kind of tickers like gold, for instance. And I was kind of interested in, I could just look at these charts and maybe work out what's going on and then make money I could make it from my laptop. I could make it. And I was in that era. I wasn't the dial-up era. I didn't need a broker. I could get straight into the market without having to go through a third party. And it was even more, at that time, it was even better to a degree, because it was almost like now, today, everyone has access, which is great for the market. But it was almost like a little bit earlier. This is 10 years ago.
Less competition.
Exactly. Mm-hmm. And also it's actually an interesting question, because is it better now? Yes, because there's more idiots you can trade against. But it was at a point where you could get into stuff that had risen so much, because obviously we've seen so much printing of currency, bubbles being created. And I think some of the markets, which we got into, obviously Bitcoin, I was so lucky I always think to myself, shit, if I was just born 5-6 years later, I would never have made this journey in Bitcoin. And that's a massive win for me, one of my biggest wins. Like, I was trading FX, I was trading individual stock shares, doing CFDs, pip charts, all the bullshit. Making $200 in one day, losing 500, making 700, losing 400. And just doing that for years, mate. Like, for years. And not really getting anywhere. Yeah, let's go, brother. Give me that. I need the caffeine. Like I said, I was out last night with some naughty chicolates, and I'm getting older, legends. I'm getting older. They have too much energy. Thank you, mate. But yeah, so my story is very, very humble, actually. It's not like I had any real, it wasn't like I had any information anyone else didn't have. It wasn't like I knew anything else that anyone else didn't know. I was just a dude who came out of the recession, essentially, the 2008 recession, with a family that had done well before but been damaged by it, and just had to kind of just come up with my own solution for that. Not in terms of poverty. I was always middle class. I always had like a good education. There was always food on the table, for instance, for me. It wasn't like I had to go and make my own money for food or anything like that. But there was ups and there were downs, especially in the UK with higher prices at that point. Mm-hmm. And then I kind of got into trading. I thought I had an edge on the Australian market. One of the biggest lessons I ever learned at the beginning was the news is bullshit. Because I thought the news, because I lived in Australia, I thought I would get an edge via the news outlets because I was in Australia and the Great British Pound, being British and being in Australia at the time, and I just fell flat on my face trying to essentially analyze the news market and then try and have an edge. Oh, look, this is happening on inflation. This is happening here. Oh, what's the interest rate going to be? And I was just like, dude, like no, like I fell flat on my face, and then individual stocks and shares was the one part of it, and then I heard in the trading community about Bitcoin, and dude, like my name's MDX Crypto, it's not MDX Forex. Like I just essentially saw from an early point. Same for you. We all, people in the crypto community, and it wasn't that early. I'm not saying I was an early crazy, fucking tinfoil hat dude who got in really, really early. It was about 2015, 16, about the same as you. I think you told me last time, and I think a lot of us just identified in 2016 that. I can sit here trading pip markets, and even the word pips annoys me. Like, I'm making a pip today. It's like, bro, it's so depressing, like the whole journey. And there is money to be made, but you're trading against banks, and it's difficult, and you have to have not even high leverage, sorry. You have to have high equity to get the leverage, go through accredited systems, and it's not as easy just to be it's not like there's no, like, you can make millions quickly in trading the stock market. I get it. Of course you can. But in comparison to the asymmetric upside, which Bitcoin offered, and actually played out, and we all benefited from it, Bitcoin was definitely my best trade of all time. Like, it had to be. Like, there's nothing which could have beaten that, because I got in at $600 and now it's trading at 75. Well, a little bit less at the minute. And I just kind of dived into. I had a little bit of trading knowledge. I never started a trading channel. I just traded the market on my own. I actually started my YouTube channel in 2019. So just a flashback, $600 went to 20K. Traded that whole market, got into the altcoin market, traded that as well. Did quite well. Lost a lot of it, though, in the 2019 time because of the volatility, and we were all over levered on BitMEX, fuck's sake. Yeah. Like, BitMEX did well. Well done, Arthur. Got some of my coin, brother. Arthur did a good job. But, it was... and then that 2019, I started a YouTube channel, which was, honestly, mate, I just never thought it was going to be what it was. I know you always hear this from, like, you. I never thought I was going to be famous on YouTube. Like, I'm not famous either. I just never thought it was going to be suddenly out of nowhere. I was going to have 50,000 people tuning in to watch a video in 21. I just thought I was going to sit there and talk about just general trading topics and not live. The live thing was so much later as well. I was just like, I remember my first video was me talking about a stable coin. Just been like, this is interesting. Maybe you should hold stable coins instead of US dollars, and then you could get into crypto easily. And that video got like 8,000 views. It's still up there somewhere. And then one of the communities, one of the little token communities called EOS at the time, latched onto it because they're like, that's built on EOS. Oh my God, it's on our platform. And they all followed me. And then I was like, cool. I was in the EOS community for a bit, like talking to them and doing some mainly fundamental analysis at that point. And then people... Well, it was just the views. I looked at the views. If I did a trading video, it got this many views. If I did a video about a coin's fundamentals, it got that many views. And I thought, okay, let's just take a little bit of the experience I have from traditional markets or trading stocks and shares and shit like that, put that onto a video, see if they like it. And then 21 was when it all kicked off. The channel went from like 10,000 subs to 80,000. So, and that was fucking fun, bro. And to be honest, that wasn't me really trading that much. It was me screaming and shouting on stream.
I remember. I remember the desecrate the like button.
Desecrate the like button.
I was watching you from the UK. So we are talking about 2020, towards the end of 2020, beginning of 2021.
Yeah, it was 2020, yeah.
And this is where you were. I mean, I was following hardcore 3 or 4 people, and you were one of them. That's why Indie never seen podcast, because it's burning the fire.
With the house fire on, yeah.
I mentioned it, but yeah, no, I mean, you have definitely a big presence. And you said early. Okay, do you think it's still early for crypto?
Yeah, this is one of those questions I always get from like no coiners. Yeah. And yes, but there's 2 ways to look at it, because there's the way to look at it. Are you going to get 20,000%? Probably not. But a 10x or a 20x is still there, and like that's still early. Like if I was going to get a 10x, like I even trade Bitcoin sometimes. I'm just like so happy of getting 4% every fucking minute, basically. Like, and I'm like, this is so mental. Like how it moves so much coming from where I was like before, where it's like 0.5%, and then it takes a week to stop doing this, and then you get some bullshit news which messes everything up. And it's no, I think it's still early, bro. Like for, let's just say, We're not the crazy tin hat full dudes who got in at the very $10, $20, $30. Even though I do remember buying Bitcoin for other purposes at those points, but I'm never that guy's like, I bought like some shit on the internet when it was in 2000, and I'm never that dude who's like, I got into Bitcoin in 2012 because I bought something on the internet with Bitcoin. It's like, no, bro, you didn't. It wasn't an investment proposition. You were just doing it to get your bullshit on the internet. Like,
Exactly.
just shut up. Like, I don't agree with that. But like, there were some points, but I'd say, yeah, in terms of the investment. The institutional investment field, 100%. In terms of maybe retail, I would say, I had this conversation literally like 2 days ago. I was like, we're not the early adopters anymore. It's like the late adopters, or let's say the early, late. We're not in the middle yet. Okay, so it's not like the majority are in yet. I would say it's the late early adopters, and then the majority will probably be the end of this market cycle. When the institutions jump in, then you'll probably get to the late adopters, or let's just say the laggers, right? I think we're kind of in that little part where it's like the S curve is about to do the most aggressive up bit, and then we're going to do the curving off. And I think it's still early, but it's not early for like the 20,000% in the altcoins and the bonks and all this bullshit and Doge doing that. But it just depends on who you are, really. It's a question about who you are. Like if you're an institution, then yeah, because no other institutions are in. Just look at the market. How many people in America own Bitcoin? 70 million? Okay, you're not the first 10 million. Institutions, you're very early. Like there's probably clearinghouses, brokerage houses, money management firms, family offices, massive equity floating around in just markets like Dubai, like companies that could be liquidated and that money could go into an investment. ETFs, like there's gonna be more ETFs created, and there's gonna be more pressure on the market in terms of buying up that spot. So Bitcoin will probably end up doing something. I don't think we've had the God candle moment yet. So like, I think all of us, especially, you were in, when did you get in? 2013 or something?
Yeah, end of 13. I mean, I guess it depends on how you define getting, because I don't know if you remember, there was a company which I shall not name. Actually, I'll beep it. It's called which is
I know that company.
I've used them in the UK to mine. So the premises was you send money, aka pounds, British pounds, and we take the money, we mine computing power, we give you Bitcoin.
Oh, Genesis Mining. I remember that. Was it Genesis or another company?
So then what happens, me and my brother, we went in with 20K each. So this was like 2013.
You got a little hash rate, didn't you? And then you would get them every day. I remember it. I did some into it.
And then a couple of years later, we wanted to cash out and we couldn't. And the old thing, by the way, is still up and running. The website is up and running, but you can't log in. And they have a lot of my Bitcoin and Ethereum later on, which was, I think it was 2017. So
oh God.
let's say I discovered Bitcoin in 2013. I invested also, but the amount of money I quote lost into this thing. So when people ask me all that, well, I invested in 2013, 2014, but I kind of went back in 16, 17, because for a couple of years I got not your keys, not your coins, right? I didn't know about custody. So at that kind of time frame. And I agree with you, because I think when people ask me, is it too late? I always say no, because I think no financial advice, anyone should take a portion of their portfolio and say, I want to risk this much into crypto, which means it's going to grow, but there is an exponential curve, right? We will not see the returns we've seen in 2013, in 2010, in 2009. Those returns are off the charts. 10x, like you said, 15x. Can Bitcoin go to $1 million? Well, yeah, it can, but it's gonna grow less and less and less exponentially, right? So it's not too late, it's not too early. I think we are right. Like you said, we are just in that spot where institutions are coming out. I mean, today I watched a video of Larry Fink saying I was wrong. Bitcoin is a good thing. So
he always was. He just now realized it.
Exactly.
They all were
and they're going in heavy. Like they accumulated so many.
1% of what they've got is every single fucking retail dude from the last 5 years.
Exactly.
So it's.
But crypto as a sector offers a ton of opportunities, right? Especially if you want. I mean, I'm no trader. We discussed it last time. I buy and hodl good projects, but you can find gems. You can have the underdex, especially now with memes, man. It's just like freaking lotteries. So can you make money with this thing? Yes. There is a rainbow of risk, right? If you go in Bitcoin and just hold Bitcoin, and every 8 years you check your portfolio, I think you are winning. But there is only a small percentage of people. And by the way, I would like to ask you this, because sometimes when people ask me, I tell them, look, I think, tell me if I'm wrong here, if you have gone into Bitcoin in 2010, you probably most likely sold most of it. 2009. Imagine buying...
Well, someone logical would.
right?
You have to be crazy not to in a lot of cases. So people get so upset. Oh, I should have held my Bitcoin. Well,
You wouldn't have.
You made 20,000%.
You wouldn't have it because you are buying, let's call it $1, right? And now we've seen $70,000. Imagine an opportunity. You have $5, $10, $50, $100.
Doubling up every time, yeah.
$1,000. I mean, $10,000. I mean, of course, unless you are someone which there are some kid like Max Kaiser and Da Vinci. Shout out to all of them.
Yeah.
But it's a small percentage.
And most of those people have had money already as well. So like, when you don't have a lot of money, you want to take money off the table to increase your standard of living in a lot of cases.
Exactly. So now that we kind of established that it's not too late, but it's not too early. I mean, how would you play the market now? Because, I'm all in. I have very small amount of fiat. Yep. I live in Dubai. I'm all like, I don't leave money in the bank because I want to have custody on my own, assets. But how would you attack the market? Would you go all in now? Because technically, we should be in a phase of the bull market. We've not seen, like you said, those massive returns yet. How would you play it?
All I can say is how I'm playing it, because everyone is different. And like that's one thing in trading. But I think it is really crucial. And I've been saying this more and more and more as I've been doing this for longer and longer, is you need to have multiple different angles and multiple different strategies all at the same time if you want to squeeze out and execute as much of the money as you can as possible. If you want to just hodl, that's fine. You're an investor and hodl it. You go up, you go down. You're not going to have the highest gain or return because obviously you're just going to get what you get. Essentially, you're just the fly on the back of a horse. The horse is going in that direction. You're not steering the horse. You're just going with it. That's hodling. You're just going to get what you get, okay? But you have to remember as well, though, just to make one point to what you said before, there's two different ways. Is your Bitcoin rising in price or are you trading to make more Bitcoin and then that rises in price? There's a difference. There's some people who are investors and some people who are traders, and there are some people who are looking for more US dollar appreciation in investing, but there are also people who are investing want more Bitcoin, and there's also traders who want more US dollars and more Bitcoin. So there's multiple facets to each part of what a trade really is. Because if you're just buying spot and waiting for the price to rise, that's a gain in US dollar valuation, but not a gain in Bitcoin. You want to get more Bitcoin. That's another whole trade in itself. That's a percentage within a percentage, if you understand what I'm saying.
I know.
So I have a trading bot that it shows on the spot side what it makes in US dollars, but then we also have a side which shows what it makes in Bitcoin. So how much more Bitcoin have you got as well? But that's another whole thing. But yeah, so I have it broken down into 4 different things. And I think it's super crucial that people need to have a proportion of their portfolio automated if you want to squeeze out the gains. Because a really good example was on my channel was saying I do think Bitcoin's going to have a pullback to the lowest part of the range. Okay, I don't want to go into numbers because I'm going to be doing this on the thing because this could be watched in 2 years or some shit. There was a really good opportunity for a short recently, which I missed because my parameters didn't get met, and it happened at a point where it would have been impossible for me without essentially being a vampire to get that trade open.
Yeah,
as simple as that. So and I missed that trade. I wanted to get $1 million short, but I missed it. But because I have a proportion, 40% of my Bitcoin in my trading accounts is traded with my trading bot, I still managed to capture 27%. Okay, 27% on a smaller amount of money, which I sold 40% of my Bitcoin in my trading account went to USDT. It dropped 27%, so I made 27% if I rebuy the Bitcoin. I didn't, and the manual side of it was not possible. Sometimes in life, you just can't get the trades you want. So the automation is really crucial. You can go online and you can find very simple strategies that have been back tested for years, decades, even on multiple markets. All the edge is patience. Because having a profitable strategy is usually not to do with something that someone else doesn't. It's not usually to do with that. It's usually do you have the patience to stick with it over a longer period of time and weather the storm when it has a drawdown? That's the main thing. Yeah, okay.
Sorry to jump in. It's the definition of the casino, why they win, because they always play, right?
They're not there to win. If you go to a casino, you're not there to win. Like that, because if you went in there and you won your first bet, okay, I'm going to leave now. I've only been here 10 minutes. No, you went to the casino to play. And you're not going to leave after 10 minutes. No, you're going to lose all your money always because you're emotionally attached to the feeling of being inside the trade or the gamble. Like the wheel spinning is the part where you're like, what's going to happen, brother? It's the same as what's going to happen to the price when you're in the position. So if you're a gambler, do not trade. You just leave that for the casino and have an amount of money that you're prepared to lose. And if you come out one time, 8K up, and then the next week you lose 5, don't worry about it because you're going to win and lose. Your overall, your equity curve cannot be good. Like I'm a gambler and my equity curve is up. Like if you're one of those guys who can do baccarat or you can do poker and you can do it extremely well, there is skill involved in that. But to be skillful is difficult. So most people can't do it. They'd rather feel, if you win the lottery, it feels good because you did nothing to deserve it except buy a ticket. If you spent 25 years building what you would have won in the same amount of money you would have won in the lottery, it doesn't suddenly feel like, oh, I've now done it. It's like, no, I worked for that, took a lot of time, I had to sacrifice, I do these things. The reason it's an instant gratification, which is a problem I think we spoke about in our last pod about life in general, like that people are so fixated on instant gratification, and that's not going to be good in trading because it humbles you like that. But back to my point about the 4 different things, 25% needs to be DCA, 100%. Just DCA, buy it every single day. Strategy on S&P 500, if you DCA, you will only if you DCA into the S&P 500 for the last 50 years, a trader would have managed to make 30% more than you. Only 30% more, really. And a lot of guys don't even make any money in trading because they lose it all because they go on tilt, they get emotional. So if you want to mitigate your risk, just DCA into the S&P, DCA into Bitcoin, and traders don't really make that much more. It's only a very small minority of traders who have the exceptional big wins, and then there's most of them are just either 30% or nothing. And then you've got Bitcoin, DCA into it, and I've got DCA, swing trading strategy, which is my bot, predominantly. I still have some Bitcoin. So swing trading is trying to identify with 25% of your money when the market will swing from high to low on a higher time frame. Lower trading, high probability setup trading. So wait on the market and wait until you see a high probability setup. This takes a little bit more, learning. I have a company which we teach this, and we have, MDX Algo, for instance. We have indicators. I have a whole company. Amazing. Like that company's grown so much, and it's all what I do every day now, pretty much. Like the YouTube is great, but I'm building that baby to help people. But so that part is you need to have 25% in scalp, which I would say, because you can, it's scalp and swing are subjective because you can have a swing within a lower time frame, which is in a range. You can have a scalp, which is a scalping down on the daily, which means it's not going to break a trend, for instance. But I would say the terminology I'm trying to talk about, swing is medium to long term. Scalp is shorter term time frames, and you're looking for that high probability setup. So you're waiting for parameters. Say you've got a spreadsheet and you've got 5 or 6 things on it. When those things begin to happen, you tick them off. And if all 5 of them are ticked, you take the trade. Perfect. High probability setup you can make with leverage as well. I'd say use leverage on this strategy. I definitely recommend using leverage because you don't want to have $1 million in exchange. Just have 100K and 10x it. And then you can have that other money somewhere else, yielding, doing things. And if you're using limit orders and you're using, if you're using limit orders to get in and out, you have to use that equity. So I'd say you have 10x leverage so you can take from the exchange in terms of you can use the tool in an intelligent way to mean that you don't have to lock up a whole load of money and then not have it potentially in another investment. So use leverage on high probability setups, don't use perpetual swaps for a medium term swing. It's stupid. Just buy at spot or get a quarterly future. I said this to everyone. Don't go on perpetuals and pay funding for 7 months. It's ridiculous.
Yeah,
they make the money, not you. And then the last proportion of it is your investments, and I would classify investments as, you could do a shitcoin, you could do a fucking meme stock, you could do Tesla, and just investments. And an investment in what I determine an investment is something that you would hold and you always will hold for longer than 1 year. Traditionally, I'd say 5, and Warren Buffett would say 10. But I would say Warren Buffett, he's a bit boring. Yeah. He sits in them for 10 years. It's a long fucking time, and he's done it great, and he's a billionaire at 86, but he can't go party on a yacht with loads of chicas at fucking 86. So I'd say, fine, that can make you money. But I'd say, you need to have in the investment circle, right? It needs to be longer than a year in crypto you're going to hold it for. And investments, your edge in investing is the due diligence you do in the project. You know about the team, the funding, you know about the PE ratio, you understand what the roadmap is. You see an idea that hasn't grown yet in the market, and all you're doing in investing is waiting for everybody to agree with you later. That's all you're doing. So that's your edge. Don't think, I'm going to go and look at the chart and look at the entry. Don't even look at the fucking chart. If you're an investor, don't look at the price chart. You're just going to cloud your judgment into what you believe is the fundamental reason you're buying it, and then you will end up selling it before a year, and then you've broken your rules. So just be an investor. Fuck the chart. Whatever price. If you think it's good, buy it.
I'm so glad you touched on so many interesting things, because I've done exactly what you painted in the beginning, right? So I've done a few cycles with Bitcoin. First cycle, I wasn't even know what the fuck I was doing. I was just like trying to catch the $1 million, right? Oh, it's going to $1 million, which it didn't, of course, but this is what happens when you don't know what you're doing. And then it went to 19,000, let's call it 20K. And it went all the way down to 3,000.
Yeah,
right?
yeah.
So we had dropped from 20 to 3. And I was like, holy fuck, like if I've basically, I mean, I didn't lose anything because I still had the same amount of Bitcoin, but in dollars, I've lost a shit ton of money. So I was like, okay, how can I play this a little bit better? Because I can still use a slice of my Bitcoins to be more strategic.
Yeah.
So this is where I decided to split my Bitcoins in different bags. So, and I use one way is just to buy altcoins, like you said, or meme coins. For example, meme coins now are really hot. We just made an investment not long ago from, I think, 1,000. We got like 90K out of it. And it's like, how can you not look into it? Like, but I'm not going all in with my Bitcoins. I literally slice. I take the pie and I go, how much am I willing to risk? Because this thing can go to nothing. And like you said, you're not going to win all of the calls. It's like investing in normal businesses. If you, I don't know if you used to watch Shark Tanks. A beautiful show. They also had a UK version of it.
Dragon's Den,
exactly, which I watch all of them. And like they say, we invest in company. We have a rainbow of companies. We just need one to go. The one that goes is going to make up for all the money we invested into the other 10, 15, right?
I want to make one point on this, what you're saying as well. Specifically crypto, what Silicon Valley is going to become is early stage investments in crypto companies, and all companies eventually are going to raise the same way as crypto companies do today. So I would say that the whole Silicon Valley venture capital space will just be companies raising money with a token, and they're generally giving it to KOLs who are advertisers as well. So they're raising money and also getting an advertiser at the same time. That's going to happen globally, I think, with all types of industries. But I would say there's one point you made which is really, really good. You can put 1,000 and get 90K out, and there's really not been like that kind of opportunity for literally, even if you are, say, my dad or your dad or even their dad, like there really hasn't been that opportunity. Maybe if you went back to the beginning of the internet stock era, but it's not these types of ridiculous, and the liquidity so connected as well, especially with the DEX space.
I was about to say,
you can get in and out. Like it's ridiculous, bro. But
that would have been my point. Sorry, it's so fucking liquid. You can get out in an
instantly.
instant.
And also, a lot of it isn't even using order books. So we're using AMM pools, and this is what's going to eventually come for exchanges as well. But that's another whole topic. But this, I would say this. I have made on Matic. I got in at Matic at 4 cents, and there's no way I could have traded better than what it gave me in terms of the appreciation of the dollar valuation of what it is, because I ended up buying it at 4 cents, 50, 60K, made millions of dollars that trade. I sold out at $2 or whatever it was, $2.50, some shit. And I put all of that into Bitcoin. And then Bitcoin went up a fucking end. I was just like, oh my God. Like it was one of those ones where it was just ridiculous. And like, there's no way, because like I said before, you can either wait for the increase you can wait for appreciation in the US dollar value of the thing you own, or you can look at how much of the thing I'm getting more of. There's two different ways of analyzing what your trade is. All right. And with Bitcoin, going from Matic and then into Bitcoin, I just saw huge increase of US dollar valuation into a big number of Bitcoin, which then went up in a US dollar valuation. I was like, oh, for fuck's sake, this is just too. And I would agree with you, dude, that there's probably, I would even sometimes say when the environment is right to do a little bit more of that in terms of low cap. I call them shitties. So meme coins are shitties. Shit coins are shit coins, right? We know that. But there's like three different levels. So you have the Ethereum is the shitcoin factory.
Yeah.
Solana is the shitties factory. Solana is the meme coins, and Ethereum is the altcoins. But they're called shit. Altcoins are called shit coins, and meme coins are called shitties. That's what we call them in my community. They're they're the smelliest, shittiest, ridiculous, most unbelievably unvaluable thing you'll ever fucking buy in your life. But it's like people will love that shit because it's gambling. Yeah, but money in this sector, you can be that guy, and like I understand it. But I would say with memes especially, it's there's a lot of scams as well, so you have to be careful. But I would say, like you said before, diversify the portfolio across it. I don't do it anymore. I don't want a pacemaker at 31. Okay, I want to chill the fuck out. And once the numbers get bigger, you do have less appetite for extreme aggressive risk, and that's fine because like you don't need it. Like you did that in the first place. Like, you know, but anyway.
I agree. I was about to say, I usually shower after a trade.
Yeah. Wipe off all the shit.
Exactly. But I think, and then we're going to mindful of time. I think there's something super important. I think maybe, I don't know if you agree with me here, but I think if you are someone like, for example, Michael Saylor, who has a ton of capital, you don't want to even think about the shitty factory thing because you just want to, and by the way, Bitcoin is already a risk compared to S&P, gold, for example. So you already, let's say your risk is already higher. But if you're someone who has maybe 10K, 15K, and he wants to go to maybe having one Bitcoin, I think it might be worth to take a portion of that portfolio and say, I'm going to hustle harder because I need, with Bitcoin, if you have $10,000 today and you just buy 10,000 worth of Satoshis, it's good. Yeah, great. Go for it. But it's not going to give you the same amount of return that a meme coin, for example, or a altcoin on Ethereum or Solana, whatever it might be. So having a portion of that, which I usually say not more than 50%, because I could not sleep knowing that I own, my portfolio has, but that's depending on the risk of the age, so many variables. But I think taking a portfolio and split in 50% Bitcoin, 50% something else, it could be 25% Ethereum, 25% whatever, and you can go down in the list, having some meme coins. I think nowadays could be a play, but there is so many ways to skin the cat, right?
I actually made a joke about that the other night. I was like, a million ways to skin a cat. And I was like, what the fuck is this expression about?
I know, right?
Why are we skinning cats?
I know.
Like, it should be shear a sheep or something. But like, skin a cat. Okay.
Yeah,
the Japanese, it's the Chinese, bruv. Propaganda.
Exactly. So why would you leave the cats alone, by the way? But there's so many different ways to play the market, right? Yeah. And depending on you, on your age, of time frame, risk tolerance. But I think I was discussing it with a friend of mine the other night, and I said, I don't think, going back to what I said in the beginning, once you do a couple of cycles and you realize that you could have a small allocation and or a asterisk allocation depending on your risk tolerance, you can play the market. You know that we've seen DeFi, we've seen NFTs, we've seen meme coins. We will always have something new on every cycle. So I think if you are someone who wants to multiply their Bitcoins or make more money, I think you should look into these things. That's for sure. But as long as you don't go all degen and take your profit.
And be disciplined on what you're saying. And also you got to remember, I have 25, 25, 25, 25. But then you have to remember is what is the allocation of Bitcoin to altcoins in each section, okay? Because it's like, for instance, I said that I have a swing trading strategy, which is my bot, but it only sold 40% of my Bitcoin within the allocation of Bitcoin in that 25%.
Exactly.
So it's the thing is about trading, and you have a lot of people who come out and they say all of the big buzzwords, but there is so many more. It's like almost when Russian dolls. It's like there's so many things which you go down, and most things you look at are actually more complicated than they begin to be when you start scratching below the surface to actually make it work. Like I'm saying, you can say, oh, I do this and I swing this and I do that, but actually to actually make it work, even the time management, having the right appropriate risk, sorting out which exchange, making sure this is working, making sure that your bot fires at the right point, making sure that when you go into a trade, you stick to your principles, write down your parameters. It's so difficult. It's not sexy. Everyone thinks trading is sexy. It's not. It's the opposite. It's like, and that's why a lot of the content you see about trading is always what you are after you become a successful trader, because it's all about trading's about what do you become after you become financially free because you're a trader. But most people don't show what it actually takes, and it's not fun. It's not fun, but that's good. It's definitely sculpted me as a human being. It's changed me as a human being. I'm much more objective. I handle my emotions much better. Depends on how many drinks I've had, but we'll keep it at that. But like, it's it really is a great thing to do, but it's very hard. And like, I would just say, like, if you're going to come into it, like a lot of people do with their, bushy tail and, starry eyes or whatever you want to call it, you're going to end up, that meme where it's like Leonardo DiCaprio and it's like him doing the champagne glass like that, and then it's like the Reverend and he's all fucked up. It's like that you're gonna go through the bear attack like at some point, and also you are probably gonna lose everything once or twice. So don't start with $1 million, please. Start with 10K and that's it, and lose it all. you're gonna lose it all a few times. But that's why I always say what you said. Good point. Is I have some which is always invested, and some which is always DCA, and some that's always bot or swing trading strategies. Just so you have safeguards, because you got to play chess. Like I always say this. I'm rambling on a little bit, but
no, go for it.
It's the market is chess, but it's also poker and risk management combined. And you need to, when you play against the market, you just have to get, it's like a lot of people do this. They go into one trade and they get out of a trade. They go into one trade and get out of a trade. That's like playing one place ahead on the chessboard. You're not going to get anywhere with that. You need to have it so you're looking at every single situation. Instead of trying to say, I think the price is going to do this, I'm then going to trade accordingly to what I think it's going to do. You don't even look at it like that. You have to look at it in a way you say, this is the potential scenarios, these are the potential outcomes. How can I position myself in a way that every single exit is covered? And if this happens, because it might happen, I have an insurance policy, I have a short hedge, I have a long buy, I have my spot buying, I have a DCA thing happening. And you just got to constantly just say, I don't really know what's going to happen, but I need to have an appropriate process to mitigate all of the issues. And I promise you, it's so much harder than it is said done, because the market is constantly changing and evolving in environments and things you can't foresee, and it's chaotic. It's so chaotic. Like you're literally trying to just constantly play chess against millions of people indirectly buying and selling, and there's an equilibrium of price at that moment, and there's thousands of things you could not even dream of understanding every single second. So they say, it's a great quote by Mark Douglas. Fuck if I can remember it. For my last night partying has got my head going. The market makes the fools out the most. And also he talks about reality gaps as well. Like there's a huge reality gap between, actually investing and trading, and they're two different things. And like a lot of people think, I'm going to come and invest in the market and do all this. It's going to be nice and easy. And I'm going to sit there with Warren Buffett and I'm not going to do anything.
Yeah.
Brother, you're going to get wrecked, man. You really are. I
agree. And I think I'm almost conscious of time, so
yeah,
wrap it up now. But I think one thing is to have a plan, and one thing is to stick to the plan. It is okay to pivot, which is necessary, because I don't think you can find immediately your goal straight away. It's not going to be a straight line. It's okay to pivot, but you have to stick to the fucking plan. And the thing is, when you do something and you go, I know better now, and you forget how
journal it, yeah,
the whole thing was designed.
Journal that shit.
And then you get wrecked.
And journaling's not sexy. I'm writing down what I did today like a fucking chica about my diary. It's not sexy. But also the thing is as well, one of the I see a lot of successful traders. I know a lot of successful traders. I know a lot of guys who have made millions of dollars, and it's not even just crypto, all the way through the whole spectrum. And they all have a very common theme. And it's that they have the potential and they have the humility to accept that they're wrong. And when the plan is not working, they do adapt and change. And like this is actually not just even in trading. You see this across the board of every single type of successful person. They have the ability to say, I actually am completely fucking wrong. And I am now going to do the opposite of what I thought because I want to be right. I have a quote. I say people would rather be right than rich. And if you want to be right the whole time in trading, you will go home with nothing because you can't. And you have to admit the fact that you need to be wrong. It's very humbling, but if you're going to be successful and make a lot of money, there's also a transition period. So say you have an environment which is swing and it turns to scalp and it's over 10 years and it's been say swing, the market's been swinging for 10 years and it changes into range bound, completely different market cycle. It's the people who can say, it's been doing this for 10 years, but now I'm looking at my equity curve, I'm going to analyze what I've got and I'm going to change because I do believe that now it's time to move on to a different thing. This is not going to happen anymore. I'm wrong. It's not going to fucking uptrend. And then this being able to switch. You can have guys who make money for 10 years and lose it all in the transition between two market environments. And it's fucking hard to watch because like we've all done it. Look at Bitcoin. No one really thought we were going to go into such a drastic bear market in the last cycle. But if you didn't have a stop loss and you weren't looking at 48 and you were like, no, I'm going to keep buying all the way down, you would have 2 years of opportunity cost of zero. You could have just been in cash the whole fucking time. Exactly. And like, you got to have a little bit of your money. I sold like 500K of altcoins up there, some Bitcoin. I was shorting when the dealers got short at 48. I know we're running out of time, but I could go on and on and on about that bear market. But then a very good example was the beginning of this bull market. Lots of people just couldn't get in their head that we've broken out of 30K resistance. There's no logical short or trade. You have to wait for a retest. And a lot of guys just shorted the whole way up this thing. And they've gone quiet now because they got no fucking money left, or they just didn't have any trades open in the first place. They were just lying about it. But like, You have to remember there's a few different factors here. If you can't switch your bias and you can't admit you're wrong, you don't just have the cost of the short open positions and the cost of having open shorts. You also have opportunity cost, because it went up hundreds of % and you were shorting the whole way down. It's not like when it goes up and then your short eventually goes into profit, you were a winner. No, you still lost 120 of opportunity as well. And you could have been in another asset class. So you're not just wasting money, you're wasting time. Just because you think that, no, it has to go down now. No, it has to go down. No, it has to go down now. And it's like that mindset of not being able to humble yourself and say, my job is not to tell the market what it's going to do. My job is to capture the movement of the market and prepare for what it's going to do. Not, I think it's going to go down, I'm going to short. No, you say with traders, you don't need to know where it's going to go. You don't need to know anything about where the price is going to go to make money as a trader. If you want to be an analyst, and you want to say, I think this is going to happen, and then it does, and it looks sexy, and then you think you're a fucking god, then fine, you can do that fucking bullshit. Like, you can do it as much as you want, but for the viewers or whatever who's listening to this, do not get mixed up between traders, analysts, and investors, because analysts will say, the market's going to do this, I was right, but they haven't got any trades open. They haven't got any trades open. They're not doing, they're not trading. Like, a trader will say, look, mate, I ain't got a fucking clue, mate, to be honest, but here's my short, here's my long, here's my risk, here's my stop loss, here's the entry if it comes here. I've got a conditional order here as well. Everything's there. Wait for it to happen. Doesn't even fucking know. But bang, P&L, 60K, 50K, right? Analyst, oh no, it's going to go down. Oh, I haven't even got any open positions, but I'm still going to fucking talk about it the whole way up. And then it eventually goes down. So it goes up 500% and goes down 10. Look at me. I was right. Nah, bro, honestly, it's laughable. But I just want to say that to the people watching and whatever. But also just make sure investing is different as well. So there's like multiple things. Well, I talk about this in my groups. I have VIP things. I educate people. I do the whole fucking 9 yards. MDX algo is growing like crazy, bro.
I've seen.
I need to give you a subscription actually.
I
need to come in the community and see what we're building. So,
Of course, everything is going to be in the link down below, and we're going to have a part 2 because last time the fire damage, there was a section on the mindset which I loved. So stay tuned for part 2, which we're going to talk about.
We'll do that.
Mindset, super important. But Max,
we went down the trading route a bit on that one.
A pleasure having you on the studio. Thank you so much.
You're a legend, bro.
I appreciate it.
Cool, man.
Thank you guys for watching. See you on the next one.